A lot of people think gut feeling is emotional. Gut feeling is like, where have I seen this before? Because of your experience is actually talking to you to tell you, trust this, not that. And that's what your gut is. Your gut is your experience, your years and years of built up experience telling you stuff that you don't listen to.
What does it take to be successful with money?
Today, we're going to hear from Wes Hall on his incredible journey to becoming a truly successful entrepreneur.
So hit that subscribe button and let's get started. This is Ticker Tape.
John, we get a lot of questions from our audience about how to be successful in business and in investing.
Absolutely. And today we get some great perspective from a leading entrepreneur. Wes Hall is known as someone who built one of Canada's leading shareholder advisory firms, Kingsdale Advisors.
He's also really well known from CBC's Dragon's Den.
Yep, as an investor and someone who was very open about his own life journey and humble beginnings in his book, No Bootstraps When You're Barefoot.
And we started the conversation off with his early years in Jamaica.
Well, Wes, thank you so much for joining us. It's a pleasure to have you here.
Yeah, thanks for having me, John.
So we're going to talk a lot about your life journey, your professional journey, what it has taught you about money as well. But what are some of the biggest lessons that you're left with, that you've learned, maybe even about you at this point in your life, in your career?
That I prefer to have money than not having it. Because I'm telling you, I grew up extremely poor. So I have a book out, No Bootstrap When You're Barefoot. And the reason why it's titled that is because as a kid, shoes was a luxury. So I did not wear shoes anywhere. I didn't wear it to school. I didn't wear it to play soccer. I didn't wear it to play cricket. It's always barefoot. And the reason why I was because I had no money. And I remember my grandmother used to, when she worked in the plantation and she raised 10 grandkids in the 2-bedroom plantation worker shack and an adult special needs adult daughter in that shack. And she would work on the plantation, get her paycheck, and then she would hide the money in a jar someplace. And that's the first time I remember that my grandmother was getting older, when she wouldn't remember where the money was hidden. And she's like, somebody took the money. But she didn't really accuse us because she knew that she didn't raise us to be thieves. So she would be like, the money's gone. I don't know where the money is. And then a month later, she would find the jar where the money was. So I kind of learned to appreciate money very, very early. And now that I have some of it, I kind of appreciate even more. All right. Like not less, more.
Yeah, that's actually, I was going to ask you what one of your earliest memories was in Jamaica with money, but I guess it was the jar. And so can you expand a little bit more on that? Like how it kind of framed your thinking about money at an early age?
Well, it's interesting because if my grandmother had relied only on the money from the plantation, I probably wouldn't be sitting here right now. We'd starve to death because it just wasn't enough to feed all those mouths, right? But my grandmother used to make puddings. She would bake these puddings, and it's just her by herself. And she would bring it to the market, Golden Grove Market, and she would sell the pudding. But her pudding was more expensive than everybody else's pudding at the market. And she would sell out really, really quickly. Within an hour of going there, her pudding is gone. So she had a dilemma. What do? I can't make more because you have to build it outside, right? So what did they do? She said, I'm going to raise the prices. Supply and demand. Okay? So she would raise the price and all these people would complain about Mama Julie, because that's what they call her. The pudding price over there, it's cheaper. And she would like, go over there. Or you buy it from me because mine is better. And I remember that vividly. And I'm like, wow, that's pretty interesting. She made a really good product, better than everybody else's, and charged more for it than actually got it.
Wow. So how old were you when you learned that lesson?
I was literally probably about 7, 8 years old.
Wow. And so you're like, the product needs to be good.
Better than everybody else. So you can have exactly the same product, look and feel, but the execution, people have to see the difference and feel the difference and taste the difference in her case when they put it in their mouths. And so those other people selling puddings in the market, they were haters, right? They were just saying, that woman is overcharging you. Why are you going there to buy our pudding? Come buy mine for half the price. And she's like, that's okay.
Yeah. But they don't want your
Yeah,
pudding.
I'm not here to compete with you. I'm here to make the best product. And if you want to compete with me, make a product better than mine.
And I wonder, we talk a lot about financial security, but how did some of those early memories create a framework for you on just the idea of financial security?
Well, when I started my business, I know we're going to get a little bit deeper into that. When I started Kingsdale, I didn't have capital. I went to the bank for capital, couldn't get any. I went to investors for capital, couldn't get any. Fortunately, I had equity in my home and I was able to mortgage my house for $100,000 to start the company. And so I start to go back into my grandmother's day when, how did she do with her pudding? Right. And even though at the time when I started Kingsdale, we had no competition, it was just us. But now I have to educate the market as to why they need my services.
Mm.
And once I educate them, how much will they pay? Because they've never done this before. They've never used a firm like mine before. So I was able to kind of test the market out because when my grandmother, like I said, she went in and she realized once the demand comes, she started to raise the prices. So I had to create that demand so that I can get the value for my service that I needed. And so to me, money was something that validated the product that I was putting out there. If somebody was willing to pay this for this, first of all, and then once you prove it, they're willing to pay this much more for it, charge this much more. So it's not about, I want to, get as much money as possible. I want to create a product that I can charge as much money as possible for.
Hmm. I want to rewind it slightly because you came to Canada as a teenager. And so you'd learned those lessons as a youth and they obviously fed into what you're doing today. But what do you remember about that time in Canada as a teenager and maybe some of your first major money decision?
So my dad came here when he was 25 years old in 1970. And he settled in Etobicoke. And then they bought a house in Scarborough. And that's the house that I lived in. September 27th, 1985. That's when I came 16 years old. And it was a brand new subdivision. And there was only a few houses built and there was dust and dirt. And I remember going in to this house and it was his, but I didn't know what home ownership was like. I didn't know that was a thing because I lived with my grandmother and we lived in a plantation worker's shack, but we got it for free because they gave it to my grandmother because they couldn't afford to pay her enough, or they didn't pay her enough. So they need a place for these workers to stay. So this is yours. So for us, that's my home. We owned a home, but we never did own it. It was the plantation workers owners that owned it. So when I came here, my dad owned this place and he was working at a factory. My stepmom was working at a factory. And then he really sat me down and told me about ownership. Like at 16, he was like, whenever you can afford to buy a home in this country, buy it. That's what he said to me. Whenever you can afford to buy a home, buy it. And never rent from anyone unless you absolutely must. That's what he told me at that age. And he said, the other thing, you have to start working and earn your own money as soon as possible. Even though you're going to school, you're not going to come home and sit on the couch and watch TV. So I had to deliver Toronto Star in the evenings and on weekends. And I had to shovel snow and make money. And he said, save it because you ain't paying rent. You're not buying food. You're not buying your own clothes. Put the money in the bank and save it. And I'm telling you, I am so happy that he gave me that decision because at 18 years old, when I moved out from his house, I had to pay my own rent. And thank God, because I was still in high school, I had that money in the bank to start paying rent and paying my bills and looking after myself.
You were talking about when you were starting your business and educating your potential clients about what that business was and figuring out what you might get paid for it. But as the business was growing, how are you thinking about money? Because I think one of the big questions, especially when we hear questions from people about being an entrepreneur, is, how much money are you putting into the business? If there's money coming in, what are you doing with that money? Those decisions, what was going through your head at that time?
Well, John, for, I don't know, maybe 10 years, my vacations were very cheap, like really cheap, because the first thing we did, just like my dad said, was we rented the house, my wife and I, when we got married. And shortly after, within about a year after getting married, we bought a house. And I renovated it myself because I didn't have money. And that home allowed me the equity to start Kingsdale. Okay. So when I left my job to start Kingsdale, I used to have a steady income. Every few weeks, I knew how much is coming in and I could budget. Now I'm an entrepreneur with $100,000 mortgage against our home. And the only income coming in is what I actually get from that business that I started. No other income coming in. And so I said to my wife, we're not going to spend unless we must. So our kids, they didn't have extra toys. They, diapers, we look at flyers when they come around and we cut coupons out. She did. I remember her going to the store and she opened up her purse and it's like, the purse looks like it's got lots of money in it, but she opened it and it's all coupons. Okay. And she's at the counter and she put the diapers on and different things. And she just keep on putting out the coupons and give it to the cashier. And that's it. So the respect for money that we had ran deep. And literally it took me about 10 years before I go, I'm comfortable now to stay at a 4-star hotel. Or I'm comfortable enough to go to a restaurant and order the steak from the menu. It took years to do that, but we owed nobody anything because every cent we made, we used it to pay off the mortgage, that $100,000 on the house, every single penny. And everything else over and above that, we saved it. And then we started to invest. Like I started to look at the markets and look at opportunity because I was familiar with the market and start to invest in the public markets and made bunch of money there and lost a bunch of money there too. That's what investing does, right? It's not a straight line up.
Yeah, this leads right into kind of my next question, which is about risk. So you talked about respect for money, work ethic, but people often say, entrepreneurs have to have a certain amount of risk. So like, what's the smartest way to take a risk, especially when maybe you don't have a lot of money?
Yeah, it's got to be calculated. A lot of people think that entrepreneurialism is a bunch of reckless people just taking risk willy-nilly. That's so far from the truth, right? Because they think about it. The only difference is that they have the audacity to pull the trigger. Everybody wants to be an entrepreneur. Everybody does. Some people do it early, some people do it late, but everybody wants to call their own shot. They want to get up when they want to out of bed, but generally speaking, when you become an entrepreneur, you actually get up earlier, right? You work harder, longer hours, because all of a sudden, those are the things that you're doing to mitigate the risk that you took to be an entrepreneur. You can't just be the same as you were when somebody else was paying the bills for you, and all you got to do is just show up, right? And the money's in your bank account every 2 weeks. Now you realize that your hard work is what's going to put the money in the bank account in the 2 weeks. And that gives you the stamina that you need to just keep going and go harder. But it also gives you that joy because I remember when I got my first big check when I started Kingsdale. It's a big check. The first big check I got was for $1 million. And I framed it. I actually was going to frame the check because I'm like, but I got to cash it because I need this million. And then I go, okay, I'm going to take a copy of it, right? And I'm going to frame that copy. The 2 reasons why I framed it was because this is validation of the hard work and the risk that I took. And I don't know what's going to happen in the future with this business, but at one point, somebody paid me $1 million to do this. And that will never be forgotten for me.
Sorry, I just want to ask one question. What at what point when you took the $100,000, like what was going through your head when you made that decision?
I was fortunate enough that my wife was extremely supportive. Extremely supportive. Yes, you can't do it alone. I tell these folks, whether it be your investor or you're an entrepreneur, you can't do it alone. You know, these people, men in particular, right? They start off with nothing. They become wildly successful. Then they look at the person next to them, their spouse, their wife, their mate, and then they go, man, I need to upgrade because look at me now. You didn't do it alone. This person's been supporting you. And as a result of that support, you have the confidence to do what you do.
Mm.
And so without them doing, can you imagine if every time you come home, when I was building Kingsdale, every time I come home at 9 o'clock after the kids are asleep because my wife put them to bed, and my wife is saying to me, listen, how much longer are you going to do this for? Because I can't be putting these kids to bed every night. You're missing out as a parent. You need to be here. You need to leave the office earlier. You need to not travel. How successful will I be if that's what I go home to?
Mm.
As opposed to, honey, how was the day today? And then we have a conversation about my day because my day was stressful, but hers was more stressful than mine because she has these 3 little kids that she had to look after and deal with every single whim that those 3 little kids have. At least I get a break by talking to adults, you know, like all day, right? She doesn't get the same break. So at the end of the day, you have to appreciate that you did not do it alone. And some people do, but most people have support. Support gets you further and you enjoy the journey better.
Yeah. We try, right? We try. And do you still have the framed $1 million check?
I still have the frame check. You know, it's not in the office. I got to, you know, because I'm like, I made a few more since then, but it's there. Yeah.
So
I remember the file. I remember everything about it, man. And I'm like, I look at this and I brought it to my wife and I said, guess what, sweetheart? We're millionaires.
it's a big moment. It's a milestone moment.
Yeah.
You talked a little bit about investing. What's your criteria? Do you have a criteria? I mean, whether it's a stock, whether it's people come to you all the time with ideas.
Yes. So when you have money, everybody has ideas for you, especially when you're on a TV show. That's invest in people, right? Everybody has, I'm in the bathroom, you know, in a public bathroom, you know, doing my business. And the person next to me is pitching me.
Oh
You know?
This happens?
Yes. Pitching me. And, you know, and then telling me that I have the product outside, man. When you get outside, I'm going to show it to you. You got to try it. Not after this, right? I'm in the line. I remember I was buying chicken in the line, waiting to order my chicken, my fried chicken. And somebody's pitching me. And they keep on making mistakes. And I'm like, dude, this is not a TV show. Just tell me about your product. You have 5 minutes. I'm next, right? And it's like, you know, they're like, keep on, I got to start again. I'm like, okay. So you always get people, and everybody's idea is a great idea. You know, the best person to pitch if you have an idea, an entrepreneur. They're the best persons to pitch. Why? Because they like every idea, because they know what it's like to not have people believe in you. And they believe in everybody that they meet. They do. And they want to support everyone because they think everyone is like them. But not everyone is like you. Some people are there just to take advantage of people with money because they go, you know, look at how many venture capitalists, right? 90% of those things are flops, but yet they get funded. Why? Because these people are looking for that next thing. And in some cases, they just don't do the work. So I've invested in public companies, did my due diligence, but guess what? It's a hit and miss. Because it's all about the person at the helm running the company. It's and the management team that they surround themselves with. Now I do a lot of investing by buying companies, looking at the ideas, and then put the right management team in place that I control to run the businesses. And that's where most of my success has been created.
And I mean, you have a lot of experience too in dealing with managements or management changes just from your day-to-day job over the years. So what makes a management team good?
I think you listen, there's a lot of business we look at in a sector, for example, whether it be mining, oil and gas, whatever the sector is, tech, whereby they're selling the same product, like I said, what my grandmother put in. And one is like sold out in an hour, and the other one is there all day, right? It's again, same product, but the person who's looking after the product, who's the steward of the product, is better, right? They think more about the quality of the product more, and they eat, live, breathe that product. So when you meet a CEO, you should be able to tell immediately whether or not this person is the right person to run this business. Okay, then you go below that and you go to their C-suite. How strong are those people? Because any one of those individuals should be able to become the CEO the next day if that person moves on. Any one of them. So if you have a CEO that's very strong and then the management team that's very weak, that's a bad sign. Then you look up at the board. The chair of the board is this person that can run something and ask really critical question and hold that CEO responsible. If you're in a position whereby you rely on the company for your livelihood, you may not make the right decisions sometimes, right? Because yes, we want directors to be independent, but we also want people to have a skin in the game as well. Because when you do have a skin in the game, you're going to behave differently, right? If your CEO is going rogue, you're probably going to bring them and say, listen, we need to have a conversation. Why? Because you're going to lose my retirement money because of your behavior. And that's why we think you find with activism, for example, one of the biggest signs that they look for in the weakness of a company and a team is ownership of the management team and the board.
Well, beyond investing, our audience is all trying to figure out money. Do you have any just daily habits that you do that you think lead to being financially successful?
I run myself and my household and my business as if I'm broke. Like really, as if I'm broke. And because I know what it's like to be broke. But I also start off from zero. Like every year, literally, I start off with zero. I care nothing about how successful the company was in the last 12 months. I go, what are we going to do from here? And I treat my own wealth the same way. Forget about what I've built. What am I going to build going forward? So I've always looked at that way. So the way that I spend whatever it is that I spend on, it's always with this attitude that money is scarce, right? Because and money is kind of like, you open up your palm and take up a bunch of sand in it, just gonna keep on going out that palm, right? Money's like that. You make it, you spend it. You got to make some more. You invest it wisely, you still got to spend it at some point, right? So even if you're the best investor in the world, you have to keep doing better. You have to keep at it because money doesn't just accumulate and accumulate unless you don't spend any of it. And most people do. And the appetite gets bigger the more money you think you have.
Right.
So if you think you don't have money, all of a sudden your appetite is adjusted accordingly.
I like that. We should just put that on the wall here.
It's great. It's great context. And, we talk a lot about financial success and people who are successful. A lot of times the reality is there are lessons learned along the way, humbling lessons. Maybe it's, money moves you'd like to take back or even financial regrets along the way, even with all of that success. Are there any examples you can share with us or even just give us context on how that might have shaped how you behave today?
Well, I remember I had a bunch of dough in the bank and I go, man, I lost the opportunity. I remember when I was working for CP Rail on a proxy fight and I had the opportunity to fly with Hunter Harrison in his plane.
The former CEO.
The former CEO of CP Rail. He's now the late Hunter Harrison, he passed. And I'm flying from meeting to meeting because we're on the activist side advising Bill Ackman. And Hunter was their nominee for the CEO if we're successful. And Hunter was retired from CN. And Bill got him to be re-engaged to become the CEO of CP Rail if we're successful. So I'm flying on Hunter's plane. And I'm like, wow, this is beautiful. This is great. I said to Hunter, why do you need a plane? Why do you need a plane? You're retired. He's like, when I was a CEO, I used to have the company's plane, and I retired, and I go, I can't go commercial again. I have to have my plane. Anyways, we were successful, massively successful, won the proxy fight. 2 years in, I'm doing the meeting, and I'm talking to Hunter, the annual meeting. And I'm talking to Hunter just after the annual meeting. The stock was went up 3 times. And I said to Hunter, Hunter, I should have bought the stock, because if I'd bought the stock, I would have had my own plane by now. Hunter said to me, no, Wes, you would have had 2 planes.
Oh my God.
Right? And there's stories after stories like that where I really like the management team of a company, and I go, but I'm not going to invest. Right? I'm just not going to invest because I don't want to be emotional about it. And I keep on losing opportunities after opportunity. So this one time I go, I'm going to do it, man, because worked for this file. And of course, after the file is over, and you have you don't have any material information, public information, you can buy and sell the stock.
Sure.
And so I called our broker, and we have to go through like a process. We have like a risk department that you have to say, here's a company. They do a check, and then they greenlight your broker, greenlight everything. You can buy the stock. We don't have conflict. And so I go, okay, I'm going to buy the stock. And I bought it. And we weren't really working for the company or anything. I saw some of the same traits that I saw with Hunter.
Yeah,
like I
you
just
got to
saw the
see it.
same traits. And I go, okay, I'm not going to lose this time.
All right.
I lost $20 million.
You lost 2 planes.
I lost 2 planes. Okay. I lost 2 planes. And I go, and then I go, okay, how do I tell my wife this? Right? Because you got to keep in mind our attitude towards money, right? You kind of, it's like we don't have it.
Right.
So how do I now say I've invested? But here's when I look back at it, what happened. When we advised the advisor to do this, they came back, because a big institution, banks and stuff like that, they came back and said, listen, Wes, that is, I wouldn't do that deal. Here's the deal that I would do. This company, who is their competitor, and these are the reasons why we do it. And I bought into their logic.
It's the noise.
Yes, the noise. I bought into their logic, and I did. I invested based on their recommendation, and had I invested based on my recommendation, I would have had my 2 planes.
So the lesson is trust your gut, get 2 planes.
And that's but that's what entrepreneurs generally do, right? A lot of people think gut feeling is emotional. Gut feeling is like, where have I seen this before? Because of your experience is actually talking to you to tell you, trust this, not that. And that's what your gut is. Your gut is your experience, your years and years of built up experience telling you stuff that you don't listen to.
Yeah.
And when you listen to other people who are supposed to have the tools, all the research tools, all the analysts, all the things that give you advice, and you go, I better listen to the professionals. Well, if that guy had put his money, $20 million of his money into that stock, then you should follow him. If they didn't do that, probably think twice about that.
Yeah. So looking back on your journey and how far you've come, what is a piece of advice that you would give? And I mean, you have 5 kids, so I guess a piece of advice that you would give to your younger self.
It's funny because so we have 5 kids, and they are very different when it comes to money. One of them, every single penny he has, he will give it away to somebody else who needs it more than him. Another one, he doesn't spend any of it. And I remember when he was going to school, when he was in high school, I would give him an allowance, him and his brother. And his brother would take the allowance and buy everything, buy for his friends and everything like that. And his brother would actually make a sandwich at home and put the $20 in his bank account. He doesn't spend anything. And if we're going to invite him someplace, he's like, who's paying? He wants to know that first, because if he's paying, he ain't coming. Right? And it's the same thing with his friends when they said, yeah, let's go to the movies. Who's paying? All right, let's get some pop. Who's paying? Okay, if they're not paying, he's not going. And so they have different views on it based on what they saw from us, right? My family and I are very philanthropic. So no wonder one of them want to give the money away because they don't hoard it. They go, it go towards better use to somebody else who doesn't have the same opportunities that I have. Whereas the other one go, I want to save it. So I'll give an example. Uh, my two sons were arguing when they were in high school. And the argument was about his older brother who was fooling around in school on not paying attention and not, getting good grades. So they were having this argument. And his brother was actually working at Canadian Tire at the time. And so he's arguing with his younger brother, and the older brother was working at Canadian Tire, and he said, um, his younger brother said, you're gonna be working at Canadian Tire for your entire career. Okay. And he said it like it was a put down, right? And his older brother said, but when you come to get your car fixed at Canadian Tire, I'm not giving you a discount. And his younger brother says, I'm not bringing my Bugatti to Canadian Tire. Right. So one already has is where I'm going. And the other one is like, I just want a job, man. You know what I mean? The other one's like, I want to drive a Bugatti. Okay. And that's so you can have two kids raised the same way and they have a different view on success, money, investing, and what their future should look like. And so to me, the discipline is having that respect for money, right? The respect for it, not the I have to hoard it, I can't share it with anyone. I got to build it up. There has to be a sense as to what you're going to accomplish when you get there. And we made sure that for us, that we show them the respect that we have for money, and they learn it from us.
And obviously, like big money lessons at home, but you're somebody that a lot of people recognize sometimes in the line for chicken,
Yeah.
as we talked about earlier. But you're also the chancellor at the University of Toronto. And we talk a lot about financial literacy and learning. And so when you're in that leadership and mentoring position as well, how do you think about these same principles and what people need to learn about money?
Most of the kids, we have about 80% of our kids are diverse, and a lot of our kids came from, underserved communities, right? So their parents have to work very hard to pay their tuition to send them to school. In addition to that, we have a lot of international students, and their tuition is a lot higher than domestic students. And in a lot of cases, their parents have to work, sacrifice to send them to one of the best universities in the world. So I try to help them to appreciate that sacrifice that their parents made to get them there, and the sacrifice that they have to make in order for them to change the life of their entire family by getting that opportunity. Like their entire family can change as a result of that. You have the best education, one of the best in the world, and that should take your family to another level. But you have to be intentional and you have to be serious about it, and you have to appreciate the sacrifice, the financial sacrifice that your parents are making for you. Because especially when you're an international student and you come to a country like Canada, let's say you're from a third world country and you come here, the bright lights, all these successful kids around you, and all of a sudden that could rub off. That attitude could rub off. I don't have to work hard. I can challenge my professors. I can just coast. You can't coast. In addition to that, they have to understand the reality of systemic racism in some cases, that you could be the brightest person, but you're not getting the opportunity, and you have to understand why you're not getting the opportunity. But how can you put yourself in a position where you're going to be successful? Couple that education that you just have with understanding behavior and understanding society, and realize that you have to now fight because you have a mission, and your mission is to take my family out of poverty. Right. And so I'm able to, by my own lived experience, be able to just, explain that stuff to them and get them to be a little bit more serious. It's hard for me to tell my kids that, you got to be serious in school because, you need a good job. You need to be able to spend and feed your family, and you need to be able to donate money to charity and all that. They live in a nice neighborhood. They're raised privilege. They don't have the same hustle that I have. They will never have that. They only get that if they want it. But I had to get it because I came from nothing. And everything above nothing is something special for me.
Mm.
Right? So it's not the same for them. So how do I instill that same hustle in them? Well, they now have to look at my example and hopefully they see something that goes, I want a piece of that part. They don't have to take the whole thing, but take a piece of it, parts of it.
Yeah, I think that's really just hard to wrap your head around the fact that it's about respecting the money and you live like you're broke, but you can say it, but how does the person really get the mindset if they don't live it or like you said have the hustle, or even the people that don't have it when you tell them you're privileged, it's just hard to get them to actually understand to
Yeah.
respect money. Like
Well,
how
well,
do you
your
do
chef
that?
walk up to them and says, "So, Mr. Young Brogan Hall, would you like steak or chicken for dinner tonight?" You know what I mean? Like they live in a privileged world
Yeah.
whereby they have people doing everything for them. And then you're telling them that the world is a tough place, you know. Well, not for where I'm sitting. You know what I mean? It's like, this is pretty cool, right?
But I love the different points of view because our daughters are exactly the same. One of them is living like she's, Madonna or thinks she's going to be Madonna, and the other one's very practical.
Yes.
So that's fascinating. All right. Well, I guess we could wrap it up with one last question about, what would be the lasting lesson you would give to our listeners about money and success?
Well, Warren Buffett talks about success, and he said, a lot of people define success, well, how much money you have in a bank account and, how wealthy you are and stuff. And he said, if you're in your 60s or 70s and the people around you that you want to loved you, that's success, right? And so that's the first criterion in my view is to say, when you're doing this journey of building whatever you're building, because if those people love you no matter what, they won't look at your financial success as the reason for them to come closer to you. A lot of people outside will do that. If you're rich there, you have lots of friends. If you're poor, you have good friends, great friends when you're poor, right? And so if those people love you, that's success. Now, financial success, I would say that you have to treat money as if like a commodity. It is a commodity. It comes and goes. It's not the be all end all. Back in the day in the stock market, when people lose money, what do? They jump out of buildings. In a lot of cases, those people jumped out of buildings, they've never been poor before. So they don't know what it's like to not have money. And they don't want to know. So they go, I'm just going to jump out of this building. Yet, if they stick it out, they're going to probably make even more money because they just learned a valuable lesson. Don't invest in this stock. Don't take that much risk. And as a result of that, they become better off, better investors, better everything as a result of that. But they can't see that other side of it. So if we view money with a respectable way and not think that it's everything, when bad things happen or when we make mistakes that are financial and cost us, it's not going to be the end of us. The other thing that happens is I always use this expression, my kids, when we're at our country place and we have these vehicles and one of his buddies from school, crashed it. And I came and I looked at it and I said, "Are you okay?" And he said, "Yes, I'm fine. But I'm really sorry about it," because I said, if money can fix it, it's not a problem. There's problems that we have that our money can't fix. When we have terminal illnesses or there's something happened to somebody in our family or loved ones, money can't fix those problems. But if money can fix whatever problem we have, whatever risk that we took, and it costs us money, we should look at it to say it can be fixed and we can overcome it. But most people don't look at it that way. So when you invest, you got to take some risk. You got to do some homework. You got to be calculated. But if the risk doesn't work out, it's not the end.
Some amazing perspective. Wes Hall, thank you so much.
Well, thank you both for having me.
All right. Our thanks to Wes Hall. Great perspectives.
Absolutely. My favorite was when he said, live like you're broke. If you want to check out Wes's book, No Bootstraps When You're Barefoot, we'll put a link in the description.
Where we have all the different ways you can connect with us. So make sure to like and subscribe so you don't miss the next edition of Ticker Take. See you next time.